Victor, thank you so much for being in our podcast again. You are one of my very favorite guests to have over, and you're incredibly busy. So I really appreciate you making the time. First, why don't you tell us a little bit about you?
Well, thank you. Thanks for having me. Well, my path into real estate and the world of development was not the typical career path. Like you, I came from the tech industry. I spent a bunch of time in Silicon Valley and started my career as a microprocessor designer, rose through the ranks of both public and private telecom and semiconductor companies, held senior engineering roles, did 5 mergers and acquisitions, 1 IPO, so got a bunch of business development experience. And then 2009 came along. You might remember there was something going on in real estate at that time. And I made a hard left turn out of the tech career into the world of real estate investing, which turned out to be a good move. It was a good time to be playing offense in real estate. Terrible time to be playing defense, but it was a good time to be playing offense. And it was a very forgiving environment, forgiving of mistakes, made plenty of them, learned things that I thought I already knew, but it turns out I had to relearn them again. And fast forward to today, started with, of course, at the time, back in 2009, 10, 11, 12, it didn't make sense to be doing a ton of new construction because you could buy things for a fraction of construction costs. So why would you build? But around that time frame, 11 and 12, we were seeing the bottom of the market. We were seeing 4 or 5 years of pent up demand where there'd been virtually no new product introduced into the market, and started to develop a skill set of building new product, initially in an urban infill setting, and then progressively over time, adding more and more components to it. So the step from there to getting increased density through zoning variances was a small step. Step from there to doing larger projects was a small step. From there to doing land development was a small step, and so on. So incrementally, over time, developed the skill of doing larger developments, where today we have a reasonable size organization. We're active in 9 states across the United States. We are active in Canada as well, which is where I reside. A couple of years ago, we opened a consulting division. And so we are also building for third parties right now as well. So we have, I don't know, 500 or 600 units of new construction that we're doing for other people in addition to our own projects.
Wow.
And just loving the journey, and happy to be here.
Amazing. I also, similar to you, I felt myself that the beginning was very stressful and very long. But then once you hit that inflection point, things somehow start to get better very quickly. So I'm finally hitting that after six
Yeah.
years. So I understand that, and am so incredibly inspired by your journey. You have right now many projects, but one in particular is huge. Can we talk a little bit about that? And then we'll jump into a couple of other topics, like how did
Sure.
you get it? How did you put it together? And what are some of the good, bad, and the ugly that so far has happened? That would be great.
I'm often asked by folks, Victor, how do you find your projects? And the honest, very humble answer is that I have no idea, because we don't hunt.
Yeah.
We never have. And every single one of our significant projects has literally landed in our lap. We've been approached where somebody says, I've got this deal, I don't know what to do with it. Can you help? They've almost all had that characteristic. And this one was no different. This was a very large property on the edge of Colorado Springs. It's 1,783 acres, or 77 million square feet. So it's pretty big. The perimeter is about 7 miles. And it was originally, the history of this property is, it was called the Norris Ranch. And Mr. Norris was the Marlboro Man in the cigarette commercials.
Wow.
So,
Wow.
a very recognizable face. And it was, the original Norris Ranch was massive. It was close to 20,000 acres. And so we got the last remaining piece from his son. Mr. Norris died, I want to say, at the age of 92. a few years ago. I don't remember the exact date, but it was a few years
Sure.
ago. And so his son, Steve Norris, owned the property, and this was the last remaining piece. Someone approached us who got it under contract, and didn't know what to do with it. So, and didn't have the wherewithal to put it together. He had negotiated a reasonable price of 10,000 an acre, or about 23 cents a square foot. So
Wow.
that's a pretty good number. Now, it's a fair price for agricultural land. And if you look at agricultural land, pretty much anywhere across the United States, it's going to vary between 3 to 10,000 an acre, depending on where it's located. Maybe if you're growing wheat on it, it's maybe towards the higher end of that spectrum. And when I talk about land value, I typically talk about the entitlement multiplier that comes with land. Because land, I mean, it's just dirt. That's all it is. So why is this dirt worth more than that dirt? Well, it's because of what you can do with it. So agricultural land, 3 to 10,000 an acre. If it's entitled for development, maybe you can put a subdivision on it, might be a couple of 100,000 an acre. If you can put a 40-story building on it, might be several million an acre, but it's all still the same dirt. Now, of course, laws of supply and demand have to come into play here as well, but it's largely tied to what you're allowed to do with it. And so when we looked at it, we said, well, if we can transform this from agricultural land into the growth path for the city of Colorado Springs, we can probably create a reasonable multiplier value. So we negotiated a contract. We took over the contract. We renegotiated it, got it re-signed with us. So it started out as a contract assignment, but it got improved. And we negotiated a fairly lengthy closing period, which included the entitlement.
Awesome.
And now it had some timelines associated with it. So it would be
Mm-hmm.
the sooner of the entitlement or the expiration. Now, we did not meet the entitlement timelines. We were originally expecting, based on conversations with both the county and the city of Colorado Springs, that this is something that would be pretty quick. It has turned out to be not that, but still, it's still an amazing project. The other thing we decided to do was to raise the capital all 100% through equity, no debt. So,
Wow,
roughly a
that's
$20 million
good.
purchase. Because when something is a long-term project like this, we're really talking about a major expansion of the city that would eventually be about 8,400 rooftops, retail, commercial, industrial, schools, fire, electric substations, the whole 9 yards. Arterial roads, collector roads, local streets. It's a major, major undertaking. And so really just closing the dirt, raising 20 million to close the dirt that's the price of admission. That's just to get started. There's a whole lot more to go into this after that.
Mm-hmm.
At first, when we were approached with it, we thought, you know what, this is too big, it's too complex, it's too, whatever, fill in the blank. And we actually let it go at first for about 2 weeks. And then we woke up one day and said, we've done other projects. Okay, add a zero, but it's
Yeah,
just
it's just a
development.
zero. It's just a
It's
zero.
just another development project. Like, why wouldn't we do it? So we decided to go for it. And so we have been successful in closing it. And the key to that is not just raising money, it's putting together the right team. So a couple of things that are unique about this particular property is it's not just another ranch, because ranch land is ranch land. Our immediate neighbor is Schriever Air Force Base, which is U.S. Space Command. So when we hear about maybe Zelensky getting intelligence from the United States, well, it's coming from right there.
Oh, got it.
Okay, so that's
Yeah.
where it's coming from. And so it's a smaller Air Force base, and it's actually now Space Force. It's the sixth branch of the U.S. military. It's its own separate. It's no longer purely Air Force. It's a smaller base as they go because it doesn't have an airstrip. It's just a bunch of antennas pointing at the sky, but still 7,000 people go through the front gates every day. And we've had some very good conversations with the leadership at Schriever to find out what it is that they need. Give us your shopping
Yeah.
list. So they've shared with us, what is it? They need to add more missions on base. They have constraints in terms of military construction budget. So in order to do that, they need to move admin functions off of base. Well, the closest office space is 30 minutes away downtown, and that's not convenient. So could you please put an office building right at our front gates? We'll be your tenant. Okay.
Mm-hmm.
What else would
Nice.
you like?
Mm-hmm.
How about a hotel? The closest hotel is at the airport, 15 minutes away. Okay. What else would you like? How about a daycare? We have 7,000 people through our front gates every day. Okay. What else would you like?
Perfect.
All right. So we've had, a number of these conversations. So we really identified the needs because of that economic anchor that is our immediate neighbor.
Yeah.
And then, and really put together a 7-phase master plan. This is going to be a 15-year project easily. 65,000 linear feet of arterial roads, 4 different densities of residential, commercial, as I mentioned, schools, retail, police, fire,
Yeah.
the whole bit. So it's a big, complex project. The key to doing any project like this is to put together the right team. It really is. I mean, I've known that throughout my entire tech career. This is no different. So yeah, you can hire qualified civil engineers that can do things. You can hire qualified planners. Well, our planner used to be the head planner for the county.
Wow.
And his staff. So they are now on our staff.
Yeah.
Right. You can't, that's a
Can't
unique
get better than that.
perspective.
Yeah.
It doesn't get better than that. Right. One of the partners in our project, his father used to be the county commissioner. His wife is the current county commissioner. So here's an individual that can invite members of city council over to his house for a barbecue, or the mayor over to his house for a barbecue, and they'll show up.
Yeah.
It's really getting that caliber of individuals on your team. One of the partners was Colorado Springs Citizen of the Year in 2019. He runs the local defense incubator, which means that there are a number of defense startup companies that all work in his facility. A couple of thousand people work in his defense incubator. He's a partner in the business. So here's someone, there's guys with lots of stars on their shoulders walking through the front gates of his building every day, and I've physically witnessed that. So he can reach out to these folks and have these conversations directly. And so when you say, well, how is it that some dude in Ottawa, Canada is buying just under 1,800 acres in Colorado Springs, it doesn't make any sense. It's ridiculous. And yet here we are, but it's because we put together the right team.
Yeah. Who, not how.
That's right.
Who, not how.
That's right.
Like Ford famously said, I don't know everything, but whatever question you ask, I know who to call for the answer. And that's all we need, really. We are the orchestrators of these deals.
That's right.
So tell me about some of the hurdles besides the entitlement that you faced that were hard.
Yeah, so the hurdles have been mostly bureaucratic. We started the annexation petition almost 18 months ago, something like that. And we're not through that process yet. There were some procedural attempts to slow us down. There's another large developer in Colorado Springs that owned 20,000 acres. And they were trying to create an environment that would make it difficult for other developers to annex into the city by virtue of essentially using water sustainability as an excuse. And they managed to convince city council to enact a new ordinance that would prevent new annexations based on water sustainability. That looked like it represented a threat to our project. We managed to overcome that. We influenced folks within city council to soften the language. Today, anyone would argue that it's a non-issue now. So we've gotten through that. We are in the queue right now behind another large project, about 3,500 acres, that's supposed to be in front of City Council in the next couple of weeks. So depending on what happens with that particular project, that will affect some of the technical aspects of our application. If they get accepted, then our map changes slightly. If they don't get accepted, then it changes another way. But either way, we're still moving forward. So there's a few technical things that are obstacles, but these are solvable problems. And it may turn out that we decide to build this initially within the county. When we first started the project, the city of Colorado Springs approached us and said, we would like you to annex because we don't want the risk of another municipality appearing on the map between Colorado Springs and
Mm,
Schriever, because we are large enough we could incorporate.
okay.
So they wanted to prevent that from happening. And they actually showed up unannounced, uninvited at a meeting that we were having with the county.
Wow.
So that was really the impetus. Now, the main benefit that being part of Colorado Springs brings us is access to their utilities. Now, we still have to pay for those utilities extensions. We would still need to pull water and sewer about 3 miles. So there's still, a good $12-15 million of incremental investment just to extend those services. And we'll have to pay for that. But there are other options within the county. Now, I don't think we'll have the water within the county to do, 8,000 rooftops. Maybe we'll start with 1,500, 1,600. But that's a start. And then maybe we annex later. I don't know. So these are, various strategies and scenarios that we're examining, and we'll see how it goes.
Okay.
We
Incredible.
don't feel threatened by the delays. We know we're sitting on tremendous value here. We know we're in a unique position. And so I feel like we have the negotiating leverage to accomplish whatever we need to, whether we go, through door number 1 or door number 2, we'll get it done one way or the other.
Incredible. Congratulations.
Thank you.
I want to leave a little bit of time to talk about where you think about where we are today in the market. Are the deals better, in your opinion? And is it a time to buy?
I think it's always specific and hyperlocal. I
Sure.
think generally speaking, I won't say that it's better in the sense that there's less insanity than there was, because I think we would all acknowledge that many of the valuations that we witnessed in 2021 and 2022 and parts of 2023 made no sense at all. So I think reality is setting in for many of those, and that's going to create distress for a number of those. If you'll think about folks that would have started a project, maybe even a value add project in 2021 with certain interest rate assumptions, with assumptions about rent growth and so on, they find themselves in a very different world today, probably with no path to get into permanent financing without
Yeah.
writing a massive check. And initially, they were probably thinking they were going to get a significant cash out refinance. Now it's in fact going the other way. So I think the lenders are still in a mode of extend and pretend, the bridge lenders in particular. And so the forecast flood of deals is a trickle, not a flood yet. I think it's coming, but I think a lot of lenders don't want to recognize distress on their books. So we're still in a world of extend and pretend,
Got it.
in my opinion. We are starting to see valuations become more reasonable, and I think we are evaluating deals on a daily basis. We are looking right now at 2 projects that are significant opportunities for office to residential conversions. I think at a decent price. We'll see how it goes. These are not a done deal by any stretch, but I think there is opportunity.
Yeah, that's great. Yeah. Agree. Now is a great time to get busy. This has been wonderful, Victor. Is there anything else that you think is important for our audience to know in today's market or with regards to real estate investing, what you have gone through since we last had you here, or anything else you'd like to share?
I think the key, I think we're at a unique inflection point right now where if you have projects that have a construction component, now's the time to do them. Construction pricing is hitting a low right now, both materials and labor. Where labor is available, people at the front end of the process are getting laid off. Architects, civil engineers, electrical engineers, they have no work because so many projects have been canceled that we're starting to see distress at that front end of the process. And we're getting I'm getting text messages on my phone from folks that, a year ago had 18 months of work in front of them, now asking for work. And
Ooh.
so,
Whoa.
and that's pretty regular. So that's significant as well. So finding labor right now for projects at reasonable rates is gotten much easier. I think if you fast forward to 26, 27, 28, we're going to be wishing that we could build at 2024 prices.
Agree.
I think that's for sure. The other thing that we're seeing is we're starting to exploit global supply chains for materials to really value engineer the projects because the increase in interest rates has been a significant headwind. And of course, the rent growth is not there. We can't forecast any reasonable rent growth because tenants are tapped out. They're at their limit. So we have to find ways to create more value by lowering costs. That doesn't mean going cheap, means maintaining or even enhancing quality, but exploiting global supply chains. So we're very active in that. And we've actually expanded our hiring ourselves to do exactly that because it's sometimes more complicated to procure materials that are in metric dimensions and adapt them for use in feet and inches. And yet they're significantly less expensive than acquiring domestically in North America. And so we're very active in that right now, where we're significantly redesigning and revalue engineering projects that we have in construction to exploit those global supply chains.
Fascinating. Great tip. Great tip. Victor, how can our listeners get in touch with you?
Probably the easiest way. I'm the host of the Real Estate Espresso Podcast, a daily show 7 days a week. Now episode 2,320 something. So I've been doing this a little while. So it's a daily show 7 days a week. Love to have you as a listener. It's available on 20 different platforms. So wherever you find podcasts, you're sure to find Real Estate Espresso as well. So it's like the Italian coffee. And these are short episodes. So literally your morning shot of espresso. So I'd love to have you as a listener, or just reach out to me if you want to email me directly, victor@victorjm.com.
And are you raising for that large deal right now, out of curiosity?
Not that deal. That deal is fully funded right now, but we are starting. We do have a few other projects that we're going vertical on, 130 unit mid-rise tower and a 259 unit mid-rise tower that we're raising on actively right now.
Wonderful. Well, thank you so much, Victor. I really appreciate your time.
All right. Thank you, Stephanie.